what systemic risk does the SEC create by removing explicit crypto scrutiny rather, and how might this reshape the market behavior when it comes to crypto-friendly administrations?
Yeah, obviously, the main reason the administration removed this restriction is to encourage innovation and transparency in the industry, which, of course, that by itself is positive. However, critics say that the removing these oversights obviously encourage fraud and manipulation, and of course, yeah, opacity of the cryptocurrency sector. So I think that is the criticism, and yes, I think they're valid on both sides. I think both sides can find some validity and what they're trying to say. But of course, the Trump administration is very pro cryptocurrency and they want to encourage innovation and development in the United States versus other countries taking the lead.
Well, is the agency integrating crypto into the traditional oversight framework or effectively just loosening supervision at a time when of high volatility, basically?
Well, as you know, central banks around the world are discussing, the central bank-backed currency (CBDC), and of course, in the U.S., this is not the case. The Trump administration wants to remove that from the central bank and not really focus on a CBDC, and instead focus on stable coins, and that's what Donald Trump has been promoting. So, of course, there's a big shift between what the United States is doing and what other countries, the European Union, etc., and countries in Asia are doing.
So, how will taxing the crypto based international transfers change the way cross border capital flows? And could it basically effectively push activity when it comes to crypto into less transparent or offshore channels?
Well, what the US is doing, I think, is trying to encourage crypto transactions or more crypto transactions to take place within the United States. Other countries are trying to put monitoring and oversight, which will, ultimately restrict potentially some of the transactions there. As you know, some cryptocurrencies are hard to track than others. I know central banks have been trying to come up with a framework that they can use to help, encourage the use of cryptocurrency while at the same time coming up with a regulatory framework. And of course, the U.S. So far differs on this. Whether or not they go offshore, I mean, this is yet to be seen.
What about the macro forces that are driving Bitcoin's drop and disappearance of the year-to-date gains? And does this decline reflect some sort of temporary risk-off cycle or a deeper reevaluation of digital assets in general?
Well, the crypto market in general over the past couple of years has seen a lot of new entrants and actually more what I would say is support for the industry. If you look at all the major banks now and the trading platforms, they're all gravitating towards crypto. We've heard of a crypto reserve in the United States and some other banks holding crypto assets. So this has all been very positive for the industry. And as you can see, over the past year, we've seen a sharp rise in cryptocurrencies, including some of the lesser known cryptocurrencies, such as Ethereum, of course, is the number two currency, and of course we have Ripple, which is that one has gained a lot of traction in the past year. However, keep in mind that although we might be seeing a bounce back or a small rally today in Bitcoin, since its high in October, of course, October this year, early October, Bitcoin reached a high of nearly $125,000 per coin, and now it's trading at roughly 92,000. So there's been a correction of over 25% in Bitcoin in the past 6 to 7 weeks. So this is significant, and as we all know, trading in Bitcoin or in cryptocurrencies is volatile, and we're seeing this volatility play out right now.
Well, this kind of brings up the next idea here. What kind of indicators will sort of signal whether the crypto markets are nearing a bottom or entering into a prolonged downturn?
I don't think we'll see a prolonged downturn or a prolonged uprise. I think what we're going to see is volatility from now until probably midway through next year when we see a lot of this regulatory framework take shape, until we see where this innovation and where the market is headed. So are we going to see a new high in Bitcoin in the short term? I don't think so. But are we going to see a sharp bottom as well? I don't think so as well. I think we're going to see Bitcoin start to trade within a more narrow trading band, which is something we haven't seen in the currency. It's been very volatile. And I think now we're going to see more stabilization in the way Bitcoin trades.
But we're also sort of seeing is volatility and uncertainty in the AI industry. Do you think that there may be an AI bubble and that it could lead to some sort of collapse when it comes to public markets, infrastructure providers, and the broader tech ecosystem in general? Because people are worried about the AI and how people have pulled back their shares as well there.
Yeah, I mean, I'm very optimistic on the AI industry in general, and I think it has a great and strong future. And we're seeing a lot of investment go towards AI, especially into data centers, into chips, etc. However, if we remember back to the dot-com bubble in 2000, 2001, the dot-com industry crashed. If you're looking at Amazon, for example, Amazon stock crashed 90%,
Mm.
Microsoft 75%, Apple 80%. These are the biggest companies of those times in that era. Did that mean that the dot-com or the internet was a failed experiment? No, it meant that this is the first phase in developing in a shakeout in the industry. So I think we're going to see something similar in the AI sector. Companies like Nvidia, et cetera, Oracle, we're going to see a sharp correction in these stocks. Is it going to be tomorrow or is it going to be next year? I don't know, but it goes without saying that these corrections, this is a process of how these industries develop. Of course, there's rapid deployment, a lot of investment, and of course, we see the reality check come into play, and this is where the correction happens. So I do expect a correction in the AI sector,
Mm.
but that doesn't mean that the AI sector is a bad sector or doesn't have a future. I think it has a bright future, but we'll have to see how this shakeout occurs.
But there's also an issue with the AI sector that even tech developers have talked about, which is the idea of energy costs, how they're very consuming when it comes to energy. And Alphabet has gone on to say that they won't be able to reach the net zero target, they're going to have to delay it. What does this actually mean for the AI frontier and how they're going to have to somehow change the infrastructure of the future of AI?
Yeah, there are two things happening. Number one is there's a lot of money deployed towards these data centers, and data centers have two major things they need. They need a lot of power. In some cases, they consume as much power as a small city, and at the same time, they consume a lot of water as well to cool all these processors. So this by itself goes against a lot of the climate actions many of these countries are trying to promote in these sectors because AI goes against that. It's heavy into energy, it's heavy into water usage taken away from more productive uses. And at the same time, we're seeing the sector shift towards more efficient use. Right now, out of China, there are AI being developed that use much less power. So I think we're going to see investment going into the current sector, which I think will probably be outdated in a couple of years, and then there'll be a new sector which is much more efficient, much easier to deploy, et cetera. And that's why we'll
Yes.
see a shakeout going forward.